Welcome to the Business Finance Bulletin, episode 206. Hi, welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, rise in County Court Judgements registered in 2017, Starling Bank embraces open banking, and personal savings are a popular source of finance for startups. The number of CCJs registered against businesses in 2017 saw a significant increase according to the Registry Trust. Now, a County Court Judgment, or CCJ as it's more commonly known, is a legal recognition of an unpaid debt. Now, the Registry Trust is mandated by the Ministry of Justice to administer the whole CCJ scheme, and more importantly, it's their job to tell credit reference agencies whenever a CCJ has been registered against a business. So what happened in 2017? Well, the Registry Trust says that in total it handled 105,633 CCJs. That's a 30% increase on 2016. Yeah, a 30% jump. That's a massive increase. Also, in terms of the total value of CCJs processed, well, that went up by 10% to just over £315 million worth of CCJs registered. But here's the interesting thing. The average value of each CCJ actually fell to £2,933. Now, why that's significant is it shows that businesses are now much more willing to pursue CCJs for smaller value invoices which are outstanding. Yet they're being much more aggressive when it comes to chasing money. So if you are suffering from late payment and you think that somebody is really just playing around with you and not paying and you want to go for a CCJ, how do you do it? Well, just go along to the Registry Trust website, which is trustonline.org.uk, and there you will see exactly how you can go about registering a County Court Judgment. In recent previous bulletins, I've referenced open banking and how its launch is going to revolutionise the way that both businesses and individuals manage their finances. Well, now, open banking, just to give you an idea first of all what it's all about, is, as it said, it's banking opened up. The idea is that at the moment all your data is held by the bank and they don't release that data to anybody. But under open banking, with your permission, you can now allow alternative lenders, alternative finance providers to dip into your bank account to verify your income and to see exactly how you manage your finances. The idea is to speed up application processes and also to open up competition. Right, so Starling Bank is another one now that has embraced open banking by announcing a tie-up with a software provider called TrueLayer. TrueLayer has developed technology and software which will allow other providers through TrueLayer to access Starling Bank customers' accounts. So these other lenders can verify income and say, look at how your bank account has performed. So the idea is to say it's really going to speed up application processes. The TrueLayer have also tied up with Zopa, which is a peer-to-peer lender, and also another mobile-only banking app similar to Starling Bank, which is Monzo. So you can see this whole open banking thing is really beginning to gather pace now, and it will change the way that we do banking. When it comes to starting a business, one of the biggest challenges, of course, is finance. Where do I get the cash from? Well, according to a recent survey carried out by Hitachi Capital Business Finance, for businesses going for less than 5 years, including the startups, the vast majority will use personal savings first. Yet the survey found that 39% of businesses going for less than 5 years will use personal savings. That compares to 28% of them for businesses over 5 years. Family members, they're another popular source of finance for startups as well, with 15% of businesses less than 5 years old going to family members, compared to 9% for more mature businesses. Now, what if you do want an element of debt where you haven't got enough savings and you certainly don't want to turn to members of your family? Well, one place you can look at is the government-sponsored Startup Loans Company. Now, they are a great source of finance for startup businesses. They will allow loans to be given to individuals up to a value of £25,000 per person. So if you've got two of you in the business, then the scheme will be able to lend you £50,000 in total. The interest rate, 6%, very good rate and repayable over 5 years. So if you do want an element of debt within your startup finance package and you want to know more, just go along to the Startup Loan Company's website, which is startuploans.co.uk, and there you'll find more information about it. Well, that's it for another bulletin. As ever, I hope you enjoyed it, and if you did, please don't forget to give it a like and a share. So that's it. Look forward to being with you next time. In the meantime, have a great, successful and profitable week.